Well, hello everyone. Welcome to Friday, the end of another exciting week in the markets, and welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab, and today we are going to clean out our closets. So you may say, like, what on earth is she talking about? Well, many of you may know that I've been doing a lot of traveling the last couple of months, and we've looked at some of our positions. We've placed lots of new trades. I've had lots of people filling in for me while I've been here and gone. But I think it's time to kind of take a look at our account, see what's in there. So we're going to do a lot of trade management today. We've got lots of things we're going to do within the world of trade management. And then we're going to place a couple of new example trades to keep, that funnel full. Because, a critical part of becoming a successful trader is to know when to get into a trade and to know, what your choices are with respect to how to trade something. An equally important part is knowing how to manage things, whether things are either going for you or against you. So that is what is on the menu today. If you are not following me on X, I invite you to do so. My handle at Barb Armstrong CS. Know that there's only one real me, but there's a lot of fake me's out there from time to time. And just know that if somebody reaches out to you and looks like me, smells like me, and it is offering you a Bitcoin or a crypto deal or to trade your account on your behalf, scariest one of all, or something like that, that's not me. That's a scammer. We also have Brent Crowther with us in the chat today, and he is a coaching manager actually, but understands all the strategies we're talking about today. If you've got questions, don't hesitate to ask. Brett's also on X, so you can follow him at Brett Crowther CS. And to all the usual suspects who are here for each and every class, I thank you for bringing the chat to life, to Will and Ricebird and John the Noble Savage and Ellie and Chuck and Ken and TM and the rest of the gang. Thank you all for being here and for being so participatory in the chat. I see we've got Frank and Josh and truth will always prevail. So it's great to have all of you here. And I encourage you to, continue to participate as we go through this and if you have questions. Okay. So let's get right down to business and just keep in mind as we start going through, because we're probably going to look at 20 different positions today. That's why I said buckle up, because we're going to be moving quickly. That options do carry a high level of risk and aren't suitable for all investors. We use the Paper Money platform we use the Paper Money software application on the Thinkorswim desktop platform. There are some nuances and differences. For this class, the most important one is that short positions will never be assigned early in Paper Money, and that can happen in a live account. So we need to be aware of this. We're going to have a super quick look. Like this morning, James Boyd and Kevin Horner had a great discussion at the market open about what's happening in the markets. And so I spend very little time on this component now. We're going to spend the majority of our time today on managing our existing trades, and then we're going to place a couple of new example trades. And one quick commercial before we get into the thick of things is that, there are in-person events offered. I was introduced to the world of trading through an in-person event back in 2011. It has been absolutely life-changing for me. I continue to love attending live events. I'll be at this one in Anaheim. And if you go to register, it will not allow you to register for this. So I encourage you, if you're considering coming to the Market Drive in Miami, and Kevin Horner will be there, you get to meet him live. Ben Watson will be at all three of these. Or the New York event, I'll be there with Ben and a cast of thousands. I mean, these are wonderful events to attend, but you want to throw your hat in the ring quickly on these before they're sold out. And it's free to attend. And I mean, we even provide breakfast and lunch and the whole enchilada, but you do have to let us know that you're coming so we can plan accordingly. Okay, so that's that one. And yeah, Eric's saying, go to the events if you can. They are a great experience. And I was at one in Dallas a couple of weeks ago, and there were a lot of people that got on a plane and flew in and were staying at the hotel for the weekend and the whole bit. So, and I used to fly, drive or fly wherever I needed to to get to these things. So it was a powerful thing. Okay, so let's start with looking at the VIX since I already have that up. You know, our volatility or fear index, it's still at the high end of the range, but it's come a long way down from where it was a few weeks ago. But if we look at this 22 that it's at now, you know, which is kind of just hovering, it's down less than 1%. You know, it hasn't that often in the last year been, you know, at this level or above. And so that might make it more appealing for selling strategies. Now, if you think that this is going to continue to be, you know, holding at around 22, then you may be, you know, indifferent. But if you think it's going to continue to come down, then, you know, selling strategies might benefit from a continued decrease in volatility. Okay, now if we look at the S&P, you know, we're just kind of continuing on here. At one point, we were down over 21%. So past correction into bear market territory, and it seems to be making a nice comeback. You know, yesterday it was like, is the bulls and the bears were duking it out, and kind of, you know, the end of the day, it was a draw. We've had several of those in the last few days. But, you know, today pulling back just a smidge, and who knows where we'll be by the end of the day, right? And when we look at the NASDAQ, which is our tech heavy index, no financials as part of this one, we're seeing kind of a similar pattern, you know, a slightly deeper drop and a slightly steeper a recovery. The next point, if this uptrend continues, is to see if it gets above this previous resistance level. And also, this is a 100-day moving average, or a 200-day moving average rather. So to see if it manages to climb its way back above that. Okay, so what have we got going on in our account? Well, let's come to our activities and positions, and let's just start at the top of the list. So we had bought 100 shares of Celsius, and we put a collar on it to protect ourselves over earnings. And we can see with this call, it's currently trading. We bought it for $34.50. The stock is trading for $36.15, so we're up a little bit. We paid $158 for our protective put, and that's lost most of its value, but it still has 13, you know, if we were to sell this, we'd get $13.50 for it. So we might want to consider just getting out of that, because over the weekend, time decay is going to continue to chip away at this thing, which expires in 7 days. And the covered call we sold, well, we've got over 90% of our max gain out of that. So maybe we, you know, get rid of that also. We take our profit on that. And so let's just come and look at the chart. So I don't know why that line is there. We'll get rid of that and come in a little closer. So here was our protective put. You know, we're now on the other side of earnings. And it's interesting because I looked at the low of this day. If we'd had a stop loss order at 32.50, we would have been nicked out at close to the low of the day. And as it turned out, you know, it did hit that, but then it's turned around and come back up. Here's our covered call. So we're going to come to our monitor tab. We're going to come to our working orders. And, oh, well, we don't have a working order to exit that one. So we're going to right click on our protective put and sell that. So this put that we bought, we're going to sell it and, you know, just take our money, see if we can get $13 for it and exit that. And then we're going to do the same thing. So there we go. We're out of that one, that side. And then we're going to do the same thing with the covered call. So we're going to buy this call back. Okay, so now our collar's gone, but we don't have anything in from a protective perspective. So we might say, hey, our recent low was at this 32.50. So let's add a stop here. So we would look at our stop, 32.50 times 0.97, say make our stop 31.52. So we're going to come to our monitor tab again. We still have our 100 shares. We're going to right click, create a closing order, and we're going to make this a stop. And there's no guarantee if this were to gap down, we could end up out at a lower amount, right? 31.52. Good till canceled. Confirm and send. And now we don't have to leave this. We no longer have a caller on it. So we may just put this in our growth stock group. Now, this stock doesn't pay a dividend. If it did, one of the differences between this paper money and a live account is that dividends aren't paid and they're never guaranteed to be, continue to be paid. Even in a live account, that can change. But we're putting that in our growth stock group. Okay, so that takes care of that one. These have nothing in them. So we have two stocks with targets. Comcast, where we bought 100 shares and we're down about $13. That one, so Comcast, we put that trade on last Friday in this class, if you wanted to go back and see the logic behind that. And then Meta, we put that trade on just on Wednesday of this week. So here's Comcast. And, we bought it and it's been continuing to kind of go sideways, but it's been trading in a sideways range. And we put our target kind of back at the top of this range. So that was the logic with that one. And Meta, I believe this target was based on the 161 extension. So with callers, John, we don't really, I didn't look at max gain on that. Were you talking about? So there's a question on what was the max gain. So those two with targets, we're just going to let those percolate. So CELH. So this is what we did today. And we must have put this on a while ago. So we sold the call for 276. We bought it back for 23. So 23 divided by 276, that's 91, almost 92% of our max gain. And on the put, we had a 90% max loss, but we were, we knew that might happen. In fact, that was, our hope is that protective put might not need to be used. And in fact, we chose not to use it. We chose to buy it back for a pittance and close it out. Okay, so that was Celsius. Comcast and Meta, we just, Wednesday, we don't have a trading a smaller account, but we have trading price patterns. And I do treat that as a companion to this class. Okay, so short put verticals. We put a trade on Visa on Wednesday. And that's kind of percolating along. So if we come back and we look at this, and so we're just going through. So now we've looked at our stocks with targets. We've moved Celsius over, so we've done that one. Our short put vertical, it's percolating along. We'll continue to percolate along over the weekend. Now, long call verticals, you can see this American Express is showing as a 0. That's because we hit our target and we're out of that trade. And over the last 5 years, what we've done with long call verticals, we've put in a target of 50%. And we said, a lot of times this year, things have been up a little bit and, 25 or 30%, and they don't get to 50 and then they come down and we turn a victory. We snatch defeat from the jaws of victory. So with this one, we put this trade on the 5th, which was Monday. And, it hit our target this morning. So we were up $75. And, you may say, well, that's not a lot. Well, we're going to call that a base hit. And as a percentage, what was our return on our risk? Because we could have lost the entire $3 a share or 300 that we spent. not counting transaction fees, we came out of it. The math on this was pretty easy, right? With 75. And that turns out to be exactly 25%. And we got that return in 4 days. So, it's like, okay, we'll take it. And we were honoring our position sizing rules. So we got out of that one this morning. You can see, it filled just after the market opened. And this is one of the things that I like about putting targets in, right? Is that, you can be out walking your dog in the morning or, doing life and, it hit our target. And so that's that one. Sherwin-Williams, we're down a little bit, but only 7%. And Visa, we just looked at, we have a short put vertical that we put on Monday or on Wednesday. We did the long call vertical on Monday. And so we're going to compare and contrast those. We've already looked at Visa. If we look at Sherwin-Williams, it's continuing to kind of mosey along. I didn't put that trade on the charts. Okay, so that's our long call verticals. Now let's come to the short call verticals, and then we'll come back to the long put verticals, which are kind of our den of despair here. But our short call verticals target we got out of, and we were going to exit that trade today because it hadn't exited when I was, planning for this class, but it ended up hitting our target at 8:34 Mountain Time this morning. And on this one, this vertical, it was a short call vertical, but it was expiring today. Target. And so we wanted this to stay below, and it did, but it still hadn't hit our 80% target. And so it's like, okay, well, it's expiring today, whether it's hit our target or not, we need to, take the money and run. And we ended up out of this one. And again, if I come to target, we sold this for 44, 3 contracts. We bought it back for 9 because it hit our target. And so we made $35 times 3 or $105. Without, that isn't counting transaction fees. And, so if you say, okay, well, if I made, 35, what was I risking? So if we want to look at return on risk on this kind of bearish to neutral trade, seeing as I did the calculations for a bullish one. So return on risk, what were we risking? Well, we were risking $2 minus that 44 cents. $2. So we were risking $1.56 and we made 35. So 35 divided by $1.56 was 22%. And that's not uncommon for a short vertical. And this was a short call vertical. But again, we made $105 and we call that, a base hit. Okay. Now there were a couple of other trades and I was asked about these in chats earlier this week. One was American Express. So let's come out, look at American Express. My system is a little slow. Oh, I must have taken this one off. So come in. Sometimes I just have to come in. Okay. So we had I think it was let's look. On American Express, it was a long call vertical. And so we placed this one on Monday and we got out of this one yesterday. And we got in for 3 and we got out for, $3.75. Oh, that one I already did. Sorry. Then we had Goldman Sachs. Goldman Sachs, we did both a long call vertical and a short put vertical. So with Goldman Sachs, we did this short put vertical at 535 and 530. We got a $1.35 credit. We bought it back. It hit our target here on the 7th. And this is unusual, but the 7th was an unusual day. It was the Fed meeting day. And so there was some kind of wonky volatility. So this may have ended up being a bit of a paper money, what I'd call a paper money fill on these. So we had this short put vertical here. And we were in and out of that the same day. And again, I don't know if you had placed that in a live account, if you would have had exactly the same result. Although the trade would still, I mean, it is above our 535 and our 530 strike, it would still be doing well. You know, so we could look at that. If you wanted to see, you know, what that would be trading for now, it's May 30th. We could come out to the trade tab and look at May 30th and say, it was 540, I think, and 535. Oh, interesting. $1.05. So we're out of that trade. You know, we could put that trade in again. Oh, 535 and 530, pardon me. So let's come in. 535, 530. It's at 87. And, you know, and yet we got out of it that same day for 25. You know, so this, like I said, sometimes you end up with the benefit of what I call a paper money fill, but the net of it is on the short put vertical. And if you have a trading journal, you would be tracking all of this, right? We've got these two, and we did one contract because we were risking $375. So we ended up by $1.10. And how much were we risking? And this is on our short put vertical. How much were we risking? Well, we were risking $5, right? Minus that $1.35 or $3.65. So that was a 30% return on our risk. Now with the long call vertical, which we put on at the same time, we paid $2.90. So we were risking $2.90. So this is the long call vertical. And what did we make? Well, we made $3.60 minus $2.90. So we made $70. So our return on risk on this one is 24%. And so here, and we did two of these, so we made 70 times two. And again, you know, I'm not taking transaction fees into account, but we made 140, so base hit on that one. And on this one, it was 110. And so which is the better strategy? Well, in this case, both worked. The short put vertical tends to be less directional. We put in a modest target on this, you know, of, you know, 25%. And we came close to achieving that 24%. With our short put verticals, our example trading plan, we say, you know, our goal is to get 80% of the max gain or 80% of the credit. Once we've got that, then we choose to exit the trade. Now, if you look at the example trading plan we created, our goal was to get out at 50%. And we've just modified that for a little bit to see how it goes. Now we're out of both of those trades on Goldman Sachs. So this is where some might look at it and say, hey, could we do a wash, rinse, repeat? And we had our strikes here. What if we moved it up to 540? So what if I came here and made this 540 instead? It looked like we might be able to get enough premium. Let's see if we could. And we could put another short put vertical on. And so if we come here and we're coming out 21 days, could we come to this 540? And we already looked, so spoiler alert, we get $1.05. So if you say, okay, I get $1.05, I'm risking $1 over $4 is 25%. So I'm getting a little better than 25% for a trade I'd be in for 21 days. And so if we're okay with that, then we change. Somehow my drop-down menu isn't showing up on the screen you see, but a little drop-down menu comes up. We choose first trigger sequence, and $1.05 times 0.2, which would give us 80%, would say we want to get out when it's worth about 21 cents. So we're going to right click anywhere on those two red lines, create an opposite order, and make it 21 cents. Now, what if we wanted to do another long call vertical if we were bullish? So this is a short put vertical. Put that in that bucket. And this is a weekly expiration, so we want to be careful about our volumes. So we do have volume here. We also have a 25-cent bid-ask spread, which is less than 5% of the option value, so we're okay there. And if we come out to the charts and we say, well, if we did want to do a long call vertical, if we're thinking that this uptrend, this trend reversal might continue, we're at 566. Could we do the 565 and the 570? And get enough premium. And maybe we want to give it a little more time. So maybe we come out to here, and do we have enough volume here? And what's the bid-ask spread? Well, 40 cents on $18, that's acceptable. So if we looked at doing this 565, which is the first strike in the money, and the 570, it's saying you've got a 46.85% chance of it being in the money at expiration, and almost a 94% chance of at least coming up and kissing it. So if we're saying that those probabilities look appealing, we'd pay $270 to get in. So if we did two of those, we're risking about $550. And so if I take 268 and I multiply that by 1.25, our target would be to get out at 335. So again, we're going to come down, make this first trigger sequence. We're going to do two contracts. We're going to right click. And the idea here is to take advantage of something that we see as moving bullishly potentially, but not to be greedy. Like we just, as a kid, they'd say, don't be a greedy gut. So it's like we're just going for a little win. Yeah. So Journey, that's why we're going to compare these. So I'm going to put this in our long call vertical group, and we're going to compare it to the short put vertical. Okay, fire in the hole. Okay, so let me just look at these questions. Can anyone answer for me where 70 came from? So Dragon Rider, you were referring to the Goldman Sachs trade where this is where the 70 came from. So someone is asking me in the chat where I got the 70. And so we're looking at our long call vertical, and we paid $290 and we sold it for $360, a day later. And if I take $360 and we subtract 290, bada bing, bada boom, we get a $70. And then to calculate our return on risk with a long call vertical, it's pretty easy peasy lemon squeezy. We just take our 70 and divide it by 290. Yeah, and that's how we got our 24%. Okay. Okay, so I have been avoiding talking about the ugly stuff, and this is, some might call it productive avoidance. It's still avoidance. So let's go and do that quickly here. So we have two long put verticals. Now these are bearish directional trades. Lulu seems to be recovering a bit. In that today it's pulling back, but we're down 50%. And our rule is if you're down 50%, you get out. And some might argue if your target is to be up, get out when you're up 25%, maybe your target should be to get out if you're down 25%, in which case, for today, we put this trade on here with the expectation that it might continue to fall, and it's not playing nicely. And so if our rule is if you're down 50%, you get out, we're down 50%. And so we're going to change this and exit that position. So Lulu, that's our short put. And we're going to cancel and replace that. We were hoping to get out the goal was to get out for 375. We're going to get out at 115. So you might be saying, well, how much more have we got to lose? Well, $117 a contract times 2. So we could be down another $234. So maybe we're better to, live to trade another day. And this is part of, I did a short video on X yesterday. And it was like 5 quick tips. And one of them was be disciplined, be consistent, have a plan. I think point number 3 was have a plan and trade your plan. So if you haven't watched that, it's under 2 minutes. You may want to go to my X feed and check it out. Okay. So that was the first one on Lulu. We also have a short call vertical. And even though we're down on this, you have to look at that and say, do we now see this as a trend direction? Because here it had kind of come up and hit its head. And that's what we were counting on, it staying kind of below this line. And since then it's come up, pulled back, come up. It could be a change in direction. And so if we look at this and say, maybe we were wrong on this. Now, some will argue, but we still have time. We still have 14 days for this to turn back around. Now, the other side is our max loss is if this number gets to $5. So we could lose another $243 on this. We could triple our loss. And so maybe we just say, hey, this has broken a resistance level that we weren't expecting it to break. It came down and maybe now it's using this old resistance as new support, perish the thought. So maybe we just need to admit that this trade did not go the way we planned and come up to the monitor tab and say, Lulu, I'm not in love with you anymore. It's official. You did me wrong. So we're going to pay our money and take our lumps. And this is a way. Now, is it possible that this could turn around and go back down? Yes, it is possible. But we're just making the best decision that we can with the information that we have. And so we're going to pay the money and take our lumps, but we're making an informed decision. What we are not doing, and this is something else I talked about in that quick little video yesterday, what strategy are we not using? It's a 4-letter word, hope. This has no place in a trading plan. You know, and the other thing we are not doing is operating based on fear. It's like, oh, dang it, I cannot afford to take another $300 loss. I'm so afraid. But I am just going to go from fear to hope and back again and back again. This is a black rainbow, people. This is not a happy rainbow. You know, so do not use these, you know, use a trading plan. That's how we manage our emotions. Oh, pray. Here's another one. And, you know, I absolutely believe in the power of prayer, but praying is not a trading strategy. Yeah. I need to add that to my list. So thank you, Lawrence. Yeah. Yeah. And, you know, another love, like I love this stock. I love what they sell. Well, you can love it all you like, you know, but if it's not going in the right direction, you know, there we go. Okay. So we've placed one new trade. Let's go and look. Well, let's look at Boeing. So, you know, why would we look at Boeing? You say, didn't China cancel a whole bunch of orders? They may have. But British Airways just bought 32 Boeing planes worth 13 billion. So that's not nothing. And the stock seems to have liked that. I mean, it has hit a 3-month high, maybe not a 1-year high, but it's up within spit and distance of it. Like at 193.50, the 1-year high is 196. You know, and it's been, you know, Boeing, God, battered Boeing, you know, it's been trading in this big range since what? Since last July. And it's just finally breaking above. And if we think it may stay above, could we do something modestly bullish, like sell a short put vertical? And for those of you who may be newer to the land of credit spreads or verticals, when we sell a short put vertical, we're selling a strike where we do not think the stock will go. So we're thinking it will stay above this. So could we come here? We have support at 187. Could we maybe sell the 185? And then to define our risk, because we can't really afford to buy $18,500 worth of stock to be assigned to us, we're going to buy the 180. So let's go see if that's a possibility. Yeah, hope the doors stay on. I fly a lot, people. Yeah. Okay. So we're going to come out that, why 21 days? Because, you know, in our example trading plan, we say 20 to 50-ish days. And here's the deal. When we get to 20 days, we have an accelerated rate of time decay. And what we want to do with a short vertical is sell something and get paid as much as we can, and that it have it decay in value as quickly as we can, which is kind of counterintuitive for those of us who grew up looking at stocks where you want to buy a stock and hold it and have it go up. This, we want to sell something and have it go down. And so it was 185, right? 185. I get chatting. So our bid-ask spread is a little wider on that than we would like, but let's just see what we get here. We probably, you know, I like the spreads here better, 20 cents. We just might not get enough premium. But so let's look at this, sell our vertical. We get $1.04. And so if we look at that and say, well, if we think it's going to stay above that 185, 180 level, that's a 25% return for a trade we'd be in no more than 21 days. In fact, we'd close it out prior to expiration. So again, we're going to come to our first trigger sequence. How many of these are we going to do? One. Why one? Well, because we're risking 400 to make 100. And in fact, our goal is to make 80, right? Oh, no, if we can't get $1, we're just not going to play. So we're going to move that back to $1. We're going to right click, opposite order. And if this doesn't fill, then we just won't take that trade. 20 cents. Now now it's saying 90. It's all over the place. We're seeing, like a minute ago, it was $1.18. So we're just going to put that in at $1. And if it fills, it fills. Margin. Okay, we're coming down to short put vertical. Fire in the hole. So we'll just let that percolate and see if that ends up filling. What else could we look at? And, we don't have a lot of time left, so we're not going to place it in another trade, but we could look at, and there we go. We got $1.04. Ask and ye shall receive. So could we do a short call vertical on Honeywell because it keeps coming up and bumping around that 215 level? We could look at that maybe on Monday. How about JP Morgan? And for an example trade, if we think that 249-ish level is going to hold, could we sell a short put vertical at 255? That kind of thing. So Mark is asking if there's a video explaining how to set up the accounts, the different groups on the monitor tab, like long call verticals. And the answer to that is absolutely. I got asked that question a lot. And so what I did, and here's my cue to say, if you haven't subscribed to the Trader Talks channel, you'll want to do that. Because if you when you first come to this Trader Talks from Schwab Coaching, the first thing that you'll see is whatever is currently being taught. And then if you come to playlists and scroll down, there's one for every class that we teach. So there's one for trading a smaller account. But if you look for this turquoise color, greeny turquoise color, the first thing, I'm doing these very short. The goal is for them all to be under 4 minutes on candlestick patterns. There's a bunch of example trading plans. And today we looked at short call verticals. So there's an example trading plan for that. Long call verticals, we had an example of that today. We exited a long put vertical gone wrong. So that's in there. These are kind of postmortems, and I haven't posted much in here lately, but I will start posting in there. And then, so you've got a bunch of example trading plans. And then if you come down to the very bottom, we've got these turquoisey blue, and there's one on the monitor tab, which walks you through how to create those groups and then how to customize it within the groups. So you'll want to check that out. And the other thing, like on that monitor tab, like I like to have profit and loss percentage. You can customize by each individual. So if it's an option, I don't put the net liquidating value in. If it's a stock, we tend to have the net liquidating value. So you can customize each group also. Okay, so guys, that is a wrap for today. I want to thank Brett Crowther for stepping in and helping in the chat. I want to thank the guys behind the scenes. I want to thank all of you for showing up and helping bring this class to life. There is also a survey in the chat today, and I'm going to repost that. And here's the deal with the survey, and that is that there are only 2 questions. So it'll take you about 10 seconds to fill it out. One was I hated it. 10 was I loved it, and I'm going to keep coming back. The other thing you can do is put in comments. So if there are topics I haven't talked about lately that you'd like me to cover, put that in. If you'd like me to go faster or slower, let me know. Here's my promise. If you fill it out, I promise to read each and every comment. The management team will look at that also. So hit subscribe to the channel if you haven't done that. Hit the like button. It's a way for you to do a favor for a random stranger who you may never meet, because it moves this up in the YouTube algorithm so more people can find it. It also lets Brett and I know that you thought this content was valuable. So we did a whole pile of stuff today. We looked at the trades that we exited. So we looked at the 2 that we chose to get out of. We looked at Boeing, at Lulu, at Goldman Sachs, at Celsius Holdings, at Target, at American Express. Yeah, we did a lot. So if your ears are bleeding, feel free to give yourself a break, but have a really awesome weekend. Get out there, hug someone you love. Make sure you call your mother and spend a little time with her if you can. And I will see you. I will see you on Monday. Take care, everyone. Lots of great content still to come. So stay tuned. Bye for now.